And my partner, David Foley, has a brilliant chart, which I can't pull up right now because I don't have access to it, but it basically showed Bitcoin and gold and how they're correlated. And what tends to happen is gold moves first. Gold smells it first, and then Bitcoin follows. So if you're bullish gold going through 4,000, which I am, I think gold's on its way to 5 or 10, you should be massively bullish Bitcoin. Because gold is more widely distributed and it just smells it. It smells the debasement that's absolutely certain to come because of the mathematical situation that we find ourselves in. Let me say a couple things. I think the next couple of quarters are going to be a real freak show. I mean, it's buckle up. It feels to me like I don't think Powell's going to get out of here unscathed.
Lawrence Lepard, a seasoned investment manager specializing in sound money principles, has identified a compelling relationship between gold and Bitcoin through research with his partner David Foley. Their analysis shows these alternative monetary assets maintain a strong correlation, with gold consistently leading as the early indicator due to its broader institutional presence and established store of value status. This positioning allows gold to function as an early warning system for monetary debasement, with signals subsequently flowing to Bitcoin markets. The predictive value of this relationship becomes crucial under Lepard's bullish gold outlook. He argues that gold's breakthrough above $4,000, potentially reaching $5,000 to $10,000, should signal extremely positive prospects for Bitcoin. This occurs because gold's wider global distribution enables it to detect monetary policy shifts and currency debasement before these concerns fully reach Bitcoin's more concentrated investor base among specific demographics and tech-forward institutions. However, Lepard identifies a critical distinction that adds complexity to this correlation: their opposing risk profiles. Gold operates as a traditional risk-off asset, attracting capital during uncertainty, while Bitcoin functions as a risk-on asset, behaving similarly to growth stocks. This creates a nuanced dynamic where both assets benefit from identical macroeconomic conditions, particularly monetary debasement concerns, while responding differently to market sentiment. Consequently, gold provides stability and early market signals during uncertain periods, while Bitcoin offers higher return potential during risk-seeking environments, with both ultimately serving as complementary hedges against what Lepard views as the inevitable mathematical pressures facing current monetary systems. If you found value in this breakdown, don't forget to like, subscribe, and share with fellow investors who are paying attention. Your support helps us keep delivering sharp analysis and bringing on voices that truly understand what's unfolding in the markets. Thanks for watching and staying tuned.
Regarding Powell, it's just such a word salad, and he's so all over the place. And, he said, the risks to inflation are higher, the risks to, unemployment are higher. I mean, clearly the employment numbers must have shocked him, the revision of the employment numbers, which led to Trump firing the guy who kept the numbers. I don't know. I was conversing with somebody who's very macro savvy. I won't dox him, but it basically said, God, the guy really cowered it out. I mean, I actually called this wrong. I thought he was going to try to be Volcker. I thought he would want his reputation to be, I'm a tough ass, screw all you people. I'm going to be the one, look, everyone on this panel knows that massive inflation is coming. It has to come or the system collapses. We all know that to be true. And I see Mike smiling. He might disagree, but we'll see. It depends on the policy response. I'm pretty sure we know what that is. Basically his stick was, I'm Volcker. I'm going to control this beast. And, I don't give a shit what the markets say. And he just crumped. He just cowered it out and said, well, maybe. And it might've been the two adverse votes. It might've been the fact that they're attacking, Governor Cooks for mortgage fraud, which she committed, it looks like. Who knows what it is? I mean, the bullying is working. And also it might just be the outright data that the employment report came in soft. I mean, my sense is if I'm him, I want to get out of there ASAP, and I want to try and hit the ball in the middle of the fairway and just, get out without a disaster. And so I'd probably follow what the CME Fed odds are doing, and we'll probably get 25 in September, and then we'll wait and see. And maybe we'll get more.
You can pull them up.
And Basent is selling short and buying long. So he's doing, kind of reverse twist or shadow QE to try and accomplish that. But they also, at a fundamental level, they need G to be bigger than R, which is growth is higher than rates. And they don't have that until, they get more, money supply growth. And money supply right now apparently is growing about 4.5%. And, they're going to have to do a big print to get it to grow more than that. And they're going to do that or else what Mike fears, which is, yeah, the price of everything's going to come down massively when the bubble bursts. And, we are in a bubble, financial bubble driven by all the free money. But the policy response, I'm highly certain, will be, to keep things going. I mean, we've heard it from, Miran and Trump and everybody. I mean, JD Vance, I mean, they get Triffin's dilemma. They know what's going on. And they crumped on Doge, right? I mean, we're going to save 2 trillion, 1 trillion, maybe 300, billion. Whoops, now it's kind of zero. The big beautiful bill comes through, so we're going to spend between 200 and 400 billion more than we thought. Granted, tariff revenues are nice and are really helping out, but even that, I mean, I got into a big argument with a lot of people on Twitter that tariffs aren't inflationary, and you're right at a technical macro Austrian point of view. I mean, if you don't increase money supply, it's not inflation, but the fact of the matter is tariffs do make the price of certain things go up, and the price of certain things go up, gets into the CPI. And inflation is a reflexive thing. I mean, inflation occurs when, the price of something goes up and the person who has to buy it then goes to his employer and says, hey, I'm not making enough money. You got to pay me more. And so the employer says, oh shit, I got to pay you more. And then in turn, I got to charge more. And it's a circle, right? And it's, we saw in the 70s that when you get in one of these things, it's harder than hell to get out of it. And that's where we are. And so, I mean, first of all, the stated inflation numbers, they're just a joke. I mean, is there anyone who really believes inflation is running at 2 or 3%? Not me, not my experience, not my grocery shopping experience, not my car insurance experience, not my home insurance experience. I mean, and I can go down the line. So, I mean, point to the price of something that's gone down, maybe eggs, because there was a shortage of eggs and chickens a while back. And so they've come back down. But so I mean, that's kind of my rant on that.
Larry,
I mean,
Larry,
there will be,
you and I have
there will be a lot of inflation. I think people are underestimating just how face peeling it's going to be. I mean, you think the COVID inflation was bad? It's going to get a lot worse, in my opinion. Mike, I'm completely with you on a trading basis, and I think your analysis is spot on. And could we have a deflationary impulse before we get the big print, and then inflation breaks wide open? I mean, I think you're a bull on gold, as am I. I mean, I think what's going on is gold is looking around the corner and smelling what has to come next, right? Which is more monetary accommodation. But I interacted with James this weekend. I mean, I've got my eyes peeled on the chart of Palantir. So if you want to kind of look at the bubble, right? In my opinion, this has all this has the real feel of 2000 to me with Cisco, and we were just never going to have enough routers, never going to have enough bandwidth. I mean, these things couldn't trade expensive enough, and as we all know, WorldCom, Nortel, a bunch of other companies went BK. And to me, the capital is being thrown into AI without necessarily a payback on it is pretty substantial. And Palantir is probably the biggest bubble company in terms of multiples in the AI space. And, as a trader, Mike, how does that chart look? So, my sense is that,
That's an island top.
we could have found the pin
head
here,
and shoulders.
right?
Yeah.
Right. And if it's true that we found the pin, you're right. We get deflation. I mean, there's just no doubt about it. But, what's the policy response to that? Well, that's what gold smells. My partner, David Foley, has a brilliant chart, which I can't pull up right now because I don't have access to it, but it basically showed Bitcoin and gold and how they're correlated. And what tends to happen is gold moves first. Gold smells it first, and then Bitcoin follows. So if you're bullish gold going through 4,000, which I am, I think gold's on its way to 5 or 10, you should be massively bullish Bitcoin. Because gold is more widely distributed and it just smells it. It smells the debasement that's absolutely certain to come because of the mathematical situation that we find ourselves in. Yeah, I don't have any great insights. I mean, a lot of great stuff out of these guys. We'll see what's happening. I mean, let me say a couple things. I think the next couple of quarters are going to be a real freak show. I mean, it's buckle up. It feels to me like I don't think Powell's going to get out of here unscathed. He's hoping that the end of May comes quickly. Sorry, dude. You're not going to be lucky. I think, the fall is typically a pretty rough period for the markets. Stock market. I think Palantir might have just found a pin. I think the whole, song and dance that the administration has done is getting a little bit old and tired. And my sense is that, if the economy does slow down, and the cuts will. I mean, one thing is for sure is we know when the cuts actually start to happen rapidly and aggressively, it's over. I mean, at the peak in 2007 or 8, they cut like crazy. Didn't matter. Same thing's true in 2020. Didn't matter. So in a sense, you almost don't want the cuts. I mean, and George Gammon and others have made the argument that the cuts will actually drive it down lower. I mean, it's a complicated argument, but there's some logic behind it actually. So we'll have to see what happens. But I think we're going to see a freak show in the next 2 quarters, and I would just say buckle up. And I think everyone who's long gold and Bitcoin, I mean, you got to be ready to ride this out. We don't know what's going to happen, but as I wrote a book about it, my strong belief is that we know how this ends, and it ends with them saving the financial system because they have no other choice. The alternative, just like when Hank Paulson was on his knees begging to Nancy Pelosi to pass TARP. The alternative is the whole thing freezes up. That's why they broke the law and bailed out Silicon Valley Bank. They literally broke the law. I mean, Dodd-Frank said, no, thou shalt not do that. And then they relied on the systemic exemption clause to, they knew the whole thing might go down if they didn't. And so they did. And that's what will happen again. So it's tiresome. I mean, this is such an obvious pattern. We know where this is going. All roads lead to inflation. So it's pretty simple what to buy. I mean, you just buy gold, buy Bitcoin, and go to the beach.
The months ahead are shaping up to be volatile, with the real risk of both a deflationary shock and an eventual wave of inflation as policymakers turn once again to aggressive monetary easing. Gold already appears to be anticipating this shift, positioning itself as a reliable hedge while capital continues to chase bubbles in sectors like AI. With fiscal discipline deteriorating and market distortions deepening, the road forward will likely be turbulent, and investors should stay alert and prepared. Do you think we'll see a deflationary shock before policymakers unleash the next big wave of money printing, or will inflation take off without that pause? So stay tuned. If you're looking for sharp, data-driven insights on crypto cycles and market shifts, don't forget to like, subscribe, and share so you never miss an update. Thanks for watching. The next chapter is just beginning.